Hi everyone, welcome to FOREX Trading Empire YouTube channel. So this is lecture 2 of the 2026 mentorship program. And if you have gone through the lecture 1, you know that we'll be having a weekly top-down analysis. And in this top-down analysis, we'll be going through the major pairs which will be used for the 2026 mentorship program. Now, formally, we do have a top-down analysis. I do live top-down analysis on the YouTube channel. But going into this 2026 mentorship program, the top-down analysis have been added to the mentorship program. So we'll be having the live top-down analysis inside the mentorship program. The point is that I'm trying to show you guys how to apply the 2025 mentorship program, what to do on a weekly basis, what are the areas for you to pay attention to, and how to identify your drawn liquidity, how to do top-down analysis going in this year, which is 2026. So make sure you stick through as I go through the major currency, and I will still explain some major parts and how you can go about your study going in this mentorship program, because there's a lot of aspects for you to take account for if you were to take on trading this year. Try to understand more about trading, grow your skills as a trader, to learn how to anticipate price correctly, how to identify draw on liquidity, and just how to look at the market the right way and have a perspective, and how to stick to your plan and have a good discipline. I'll talk about it inside the live top-down analysis, so make sure you stick through as we go through the lectures. So we're currently on the chart of the dollar index. Now, the reason I do my trouble analysis from the dollar index is because I'm taking account of correlation. I'm taking account of correlation, where there's going to be a correlation in price, because the major currency I do trade is Euro USD, GBP USD, and USD JPY. And if you were to take notes in those currency, they have one core currency or base currency in common, which is the dollar. And if I want to take account of correlation, I should take account of correlation of the dollar index, how the dollar index is going to correlate to those three major currency pairs that I do trade. So I do my first analysis from the dollar index. And if you were to trade currency, I can say that you can take full account of what is the dollar doing, what's the dollar doing, what's the drawn liquidity on the dollar index. It's very important because that will give you a general perspective on what most major pairs will do on forex pairs, like the forex currencies. If you are to trade gold, it's mostly when gold is on a downward season, when it's not on an all-time high. There's still a few correlation. There's still times where the gold and the dollar is slightly correlated, in a sense that if there's going to be higher prices on the dollar index, then there might be lower prices on gold. So there's still correlation when it comes to gold and the dollar index. The same thing to the S&P 500, the S&P 100, there's still correlation to the dollar. So make sure you take full account of what is the dollar index doing first before looking at your own personal currency pair, because that will give you a perspective. Now, how is being correlated to the currency pair you do trade is based on the currency you do trade. So if you are to trade Euro USD, you know there are inverse correlation between those currency, because the base currency is Euro and the quote currency is the dollar index. So the price of dollar index do change. So if there's going to be higher prices on the dollar index, then there will be lower prices on Euro USD because they're inverse correlated. The same thing goes to GBP USD. They're still inverse correlated. While USD JPY, they trade, they're correlated on the same perspective or on the same bias. If there's going to be higher prices on the dollar index, there will be higher prices on USD JPY. And if there's lower prices on the dollar index, there'll be lower prices on USD JPY. The same thing goes to USD CAD. The same thing goes to USD Swift. The same thing goes to USD Australian. But most major pair that's being traded is Australian USD and New Zealand USD. So those are inverse correlated to the dollar index. So make sure you know how that currency you're trading is correlated to the dollar so that when you understand what is going to be the dollar price, what is the drawn liquidity on the dollar index, it will be easy for you to correlate it with your own personal currency. So when you're doing a top-down analysis, start from the weekly time frame. Now, the weekly time frame, you're looking at the higher time frame perspective on what is going to be the draw on liquidity on a broader time frame. Now, it's not like you're looking at it as your overall bias. I can say get your overall bias from the daily time frame, but use the weekly to have an overall perspective on what is price currently doing. Why is the daily time frame trading to that bias, or what is the daily time frame trading to, and what is most likely to happen on a longer perspective of price? So that's the reason I do look at the weekly. Sometimes I look at the monthly when the weekly is not that clear to me. I still look at the monthly, look at the daily, and try to decide on where I will be trading to. So on the weekly time frame of the dollar index, dollar took out buy side liquidity, took out daily buy side liquidity before the internal shift, running out the swing low. Now, so far before the end of 2025, price is an internal shift on a downward trend, trading back to this range from the swing high to the swing low after the run on the buy side liquidity. Currently, price is in a downward trend inside the range, taking out the swing low, making it a downtrend. And so far, before the close of 2025 candle, price did a swing low. There was a swing low, price from the swing low. You can see here's the first candle, second candle, third candle. You can see the second candle took out the first candle's low, traded back to the range, and the third candle failed to go below the swing low of the second candle, making it a swing low. And if there were to be a counter trend in this trend for price to trade higher, the first draw on liquidity should be the buy side liquidity. And if price were to run the buy side liquidity, where would be a resistance area for price to use for a retracement to trade lower if the trend were to be a downtrend? So those are things you need to take account for after marking out your point of interest. So after price from the swing low, price of the retracement took out the buy side liquidity. So if price were to keep on retracing, because this is a counter trend, so price is retracing to a point of interest to trade lower. And here is a breaker's block. After the internal shift, after running out the buy side liquidity, here is a breaker's block. You can see I marked it out as an out block. The breaker block might serve as a resistance area for price to retrace to before trading lower. Because clearly we can see that there's no fair value gap within the price range of this. After the run on the buy side liquidity, there's no fair value gap before the breaker's block. So it's safe to say that we can anticipate a retracement back to the breaker's block before any trend trading lower. So you can see how you understand the higher time frame perspective, understand a broader time frame perspective on what is your trading range going in to the lower time frame, like the daily time frame. Now, there's a trading range within this price range. After I run the buy side liquidity, there might be a retracement to the breakers block. So that is the idea we'll be going in. So we're looking for a retracement down to the breakers block. While on the daily time frame, price did an internal shift, or you can call it a complete shift of structure, did a retracement, traded through the daily fair value gap. After a run through the daily fair value gap retracement, used it as an inversion fair value gap, took out the swing high, leading to an internal shift. Now, looking at it from a weekly perspective, this is an internal shift, and in this internal shift might lead to a retracement for price to trade to the breakers block from the weekly time frame. Now, the daily time frame is an uptrend because price just did a recent shift in structure, running out this buy side liquidity. So me, I'll call this a shift in structure because I want to see price close and support either from the inversion fair value gap because this will serve as an inversion fair value gap, might lead to price using it as a support to trade higher to the in to the breakers block. So the inversion fair value gap might serve as a support for price to trade higher, or price might form a fair value gap to use to trade higher to run the buy side liquidity and to trade to the breakers block. So far, my bias on the daily time frame, I'm anticipating higher prices. And on the weekly time frame, I'm looking at this trend as a short-term trend. Now you can see how I'm using those time frames to define my bias. I'm sticking with the idea of the daily time frame, but at the same time, I'm taking account of the weekly time frame. What are the trading range on the weekly time frame? On the weekly time frame, there's a perspective of price doing a retracement to the breakers block. And on the daily time frame, there's a shift in structure, leaving an inversion fair value gap where price might use the inversion fair value gap as a support area to retrace to the breakers block. Now, this is very important. Before actually looking at candlestick formation or looking at candlestick pattern, you need to understand the draw on liquidity. So the draw on liquidity currently is the breakers block, a retracement to the breakers block. Now, you use the 4 hour and the 1 hour to define your entry, but you use the weekly and the daily to define your bias. So you need to understand how to use multiple time frame. It's very important because I will be using multiple time frame throughout the 2026 lectures. So make sure you understand how to use multiple time frame. Now you can go back and watch this live top-down analysis later on to understand it more better. Learn how to keep notes on steps I'm using to define my bias. I use the weekly to understand the ranges that I'm trading within. Then I use the daily to define the current bias in price, which the current bias in price is the price took at the buy side liquidity. And the next draw on liquidity is the weekly breakers block, which is on the daily time frame. You can see a consecutive of upwards candle before the run on the buy side liquidity, before the shifts in structure, running out the swing low. Retracements, price retrace to the breakers block used it once to trade lower, which is on the daily time frame. While on the weekly time frame, the breakers block haven't been retraced to, so there's a chances of price retracing to the breakers block. Now, will price trade through the breakers block or use it as a resistance to trade lower? It's depending on how price trades to the breakers block. So on the daily time frame, the current bias we're looking at is for price to retrace to its support. Price can either use the new week opening gap as a support area to trade higher, or use the inversion fair value gap, or price will trade to form another fair value gap to use to run the buy side liquidity. The point is that is to pay attention to points of interest supporting the idea of price supporting to trade higher to the breakers block. On the 4 hour time frame, Before the opening price, I was looking for higher prices to run the buy side liquidity because before the close of last week candle, price did a retracement to a 4-hour order block, respected the 4-hour order block, traded higher. And if you look at the 4-hour time frame, you can see how price traded through the daily fair value gap. You can see the first move trading through the daily fair value gap retracement to the first order block, respected it, created a new swing high, retracement order block, respected the order block before the run on the buy side liquidity. After the run on the buy side liquidity, now the 4-hour trend might still lead to a continuation, but I will mostly wait for a daily support, for a daily point of interest to give me a clear support. Then I look for a 1 hour entry to anticipate higher prices to trade higher. Because currently price took out a buy side liquidity and there might be a retracement lower. So looking at the 4-hour, I might look at it as a support on a daily basis, but not as an overall support leading to higher prices or price to trade to the breakers block. But for an intraday setup, you can still look at the support area for an intraday setup. On the 1 hour time frame, price did a retracement to a 1 hour fair value gap. Price traded through the 1 hour fair value gap. Now for intraday setup, there might be a counter trend. There might be a retracement down to the new week opening gap. Depending on how price is trading based on time, if there is a 1 hour support failing to hold price, which clearly we can see that the 1 hour fair value gap is failing to hold price, and price used the 1 hour fair value gap as an inverse on fair value gap to resist lower, then we might see lower prices to the new week opening gap. Now, I'm not going to be talking about intraday setup in this lecture. Maybe another lecture, I will talk about how to trade individual candle when you have a bias. Talk about the process to define your bias before actually deciding on what the candle is doing for you to trade on. But the idea is still valid for price to retrace lower to the new week opening gap based on the idea that price already took out the buy side liquidity before the London section. London section led to a retracement that traded through the 1 hour fair value gap. But overall bias is to see a retracement to the weekly breakers block. On the weekly time frame of Hero USD, on the weekly time frame of Hero USD, last week price retraced lower, forming a swing high, and I was looking for a retracement to the weekly fair value gap, which currently price already traded through the weekly fair value gap. So let's take out some areas. So you can see how price traded through the weekly fair value gap, which there was a trade I did too before the retracement to the weekly fair value gap. When I get to the 1 hour time frame, I will explain the position. Seeing that price traded through the weekly fair value gap, there might be a retracement to the weekly order block, which means on a daily time frame there's a shift in structure. So there might be a retracement lower to the weekly order block. Now this is a weekly order block, not a breakers block, because price failed to run the swing low before the internal shift, running out the swing high, leading to this swing low and swing high. So the last down close candle before the impulsive move is this candle before the state in change of delivery is this candle. So there's a slight chance of a retracement lower to the other block. mainly because it's fully aligned with the dollar index for the dollar index to trade higher to the breakers block, which means there will be lower prices on Euro USD. So if price were to trade lower, we want to see price trade lower to the weekly order block. And the overall idea is for price to surpass from the order block to run the buy side liquidity. On the daily time frame, price took out the swing low, leading to a shift in structure. And after the shift in structure, price traded through the weekly fair value gap. So you can see structure wise is aligned with the dollar index. The dollar index recently took out a buy side liquidity leading to a 1 hour shift in structure to the upside, while on Euro USD, price recently took out a sell side liquidity leading to a shift of structure to the downside for price to retrace to the weekly order block. So I will be anticipating lower prices, but I want to see price use a daily point of interest as a resistance area to trade lower. So I'll be paying attention to the breakers block, mostly the week of the breakers block, which will be highlighted red. I'll be paying attention to the week of the breakers block to see how price will use it as a resistance area to trade lower to the other block. But if price were to trade through the week of the breakers block, I'll still be looking at the inversion fair value gap as the resistance area for price to use to trade lower to the weekly order block. The bias is still anticipating lower prices, so I can say in weeks, maybe 2 weeks, bias might be to anticipate lower prices as long as price is respecting a point of interest, a daily point of interest, resisting from that point of interest to trade lower. I will be anticipating lower prices or price to trade lower to the breakers block on the dollar index, while on the Euro USD to the weekly order block. So the bias is pretty clear on what I'm anticipating price to do, and the daily is aligned with that idea. On the 4 hour time frame, after price took out the street low, the 4 hour time frame have stayed on a downtrend, trading below the weekly fair value gap. So there might be a retracement, and that retracement is still aligned with the 4 hour, which you can see there's a 4 hour order block after the swing low, after price from the swing low, taking out the swing low. Here's a 4 hour order block, and there's a 4 hour fair value gap. Now you can mark this on your own charts. I'm trying not to make my chart crowdy. So there might be a retracement, looking for that retracement to the breakers block from the daily time frame, and it's still aligned with the 4 hour trend to anticipate lower prices for price to trade lower to the daily order block. So you can see structure wise, they are fully aligned with the dollar index. Euro USD is fully aligned with the dollar index, and the 4 hour trend is still on a downtrend, trading lower to the breakers block. On the 1 hour time frame, you can see trade from this order block was my entry last week. Limit order at the other block. Now, on my own broker that I do use to take my trade during this time, they weren't active, so I didn't get triggered on this first retracement to my entry level. It was the second retracement when trading activity was fully open that I actually took the sell for price to trade lower, and price traded lower close to the TP before the close of the week, which I didn't close the trade, but after the opening of the week, price traded lower to the full take profits in taking out the daily swing low. Intraday setup, you can look for intraday setup if you know how to pair up the daily, the 1 hour, and the 5 minute time frame. There's the intraday setup on Euro USD. But for now, I'll wait for that confirmation for price to retrace to the daily point of interest before actually looking for a strong bias for price to trade lower. So you need to be patient enough to wait for those time frames to be fully aligned. You need to wait for those retracements. You need to wait for those supports on those points of interest before actually taking any trades. So I will be patient enough to wait for price to retrace to a daily point of interest before actually looking to take any trade. Mostly because we're on the first week of the year, I don't want to go that aggressive into 2026. I think I will be sizing up on lower positions. I think taking up lower trade, lower risks for the meantime till I see a consistent of good trades, good trade movements before actually sizing up my position. On the weekly time frame of GBP USD, after the run on the sell side liquidity last year, price did an internal shift, trading through a weekly fair value gap, retracement to the weekly fair value gap, used it as a support to trade higher. The next draw on liquidity is to see price run the buy side liquidity. So currently I'm looking for price to run the buy side liquidity. Now, before the close of last week candle, price traded lower, closed in the range. At the same time, we have a draw on liquidity. The weekly time frame is aligned with that drawn liquidity for price to trade higher to run buy side liquidity. I'm anticipating higher prices and looking at the daily time frame. The daily time frame trend is still aligned with the idea of price running the buy side liquidity. You can see price is still in an uptrend. Currently, prices were expecting a daily fair value gap, which you can see price from the swing low in the daily fair value gap, and there might be higher prices for price to run the buy side liquidity. Now, clearly you can see that the bias is not fully aligned with the dollar index because we are anticipating higher prices on the dollar index, which means we will be anticipating lower prices on GBP USD. But looking at the structure of GBP USD, there is a chances of price trading higher. So there is a chance of price trading higher. So to consider correlation, I wouldn't be taking any trade if price were to trade higher. So I wouldn't be taking any account of price trading higher to run the buy side liquidity. Now, structure wise, price is fully aligned with the weekly and the daily for price to run the buy side liquidity and to go for the overall bias. If the dollar index were to fail in the idea of price trading higher and GBP USD kept trading higher to run the buy side liquidity and the dollar index kept trading lower, then I will be looking at price trading higher on GBP USD. But for now that the correlation is not fully correlated, I will be taking advantage of any trade. Instead, I will be using it as a study case to see how price will be rolling the buy side liquidity or price trading below the fair value gap to use it as an inversion fair value gap to align with the dollar index to trade lower. Sorry, excuse me, I will be back in a minute. So understanding that if I have a bias and the bias is not correlated with the dollar index, mostly when I'm trading currency pair that are fully correlated with the dollar index like GBP USD, Euro USD, USD JPY, I wouldn't be taking account of that bias. Now, I might use that bias for study case to see how price is delivering and to pay attention to how the dollar is trading to see when the dollar will be correlated with the idea of the currency pair or when the currency will be correlated with the dollar index. Okay, those are the times for me to take advantage. But in this example, in this trade currently, the GBP USD is not correlated with the dollar index. They are looking at I'm seeing price trading to the same bias, which is not correlated with the idea of an inverse correlation. But at the same time, I will be looking at how price will be trading to see if price will be running out the buy side liquidity or price trading below the daily fair value gap. But if price were to trade below the daily fair value gap, I will be anticipating lower prices for price to retrace lower to the weekly inversion fair value gap and the weekly order block. On a 4-hour time frame, after price retraced the daily fair value gap, price trade above, we expected a 4-hour order block retrace lower. And so far this week, there's a retracement. I thought price will be trading through the daily fair value gap because on how price was respecting the fair value gap and this order block from the 4-hour time frame. But you can see there's an internal retracement. Now, this is not an internal shift currently. I can call this a 4-hour internal shift. I need to see price run the swing high before I can call it an internal shift. But at the same time, there's still a chances of price trading lower. When you look at the 1-hour time frame, you can see that there is a trend trading lower for price to trade through the daily fair value gap. Now, because it's not a high probability setup, I wouldn't be taking advantage of the sell from the 1-hour order block. There's still a chance of price trading lower from the 1-hour order block. Weekly time frame of USD JPY. On a weekly time frame of USD JPY, so far USD JPY have been trading higher to run the buy side liquidity as the overall draw on liquidity. In last week, price respected the weekly order block, forming an up close candle, which is the chances of price running out the swing high and running out the buy side liquidity before going for the overall draw on liquidity. On the daily time frame, retracement to a daily order block respected the daily order block, which here's the down close candle before the impulsive move, respected the daily order block, and so far price have been trading higher to run the buy side liquidity. Looking at this retracement, I think price retracing to this order block, internal order block, to use it as a support to trade higher. But my overall bias, I'm anticipating higher prices on USD JPY. Now, this bias is correlated with the dollar index. For the dollar index to trade higher, we want to see USD JPY to trade higher at the same time. And the structure is aligned with that idea. At the same time, the 4-hour time frame still aligned with the idea. Swing low, swing high, retracements, 4-hour order block as a support area for price to trade higher to run the buy side liquidity. So I will be paying attention to how price will be trading on USD JPY to see the results of the forecast that I'm forecasting on the dollar index. So going through the 2026 mentorship program, I'm mostly going to be doing the live top analysis throughout the year so that you guys will understand how to anticipate price, how to decide on where you will be trading to, where's going to be your bias going in the week, where's going to be the bias going in the day. I will be doing a charter analysis on how to do a charter analysis to decide on what is going to be your bias on a daily perspective for day traders. So if you're a day trader, I will be doing a top-down analysis tomorrow on Euro USD. It will be an early lesson. I think it will be uploaded on the YouTube channel at an early lesson, but it's going to be lecture 3. I will be talking about daily bias and how to decide if the next day is going to be an up close candle or a down close candle. I'll be talking about how to decide the bias and what to pay attention to on a 1 hour perspective on how price will be delivering trading in, which will be tomorrow's price action. So make sure to stay tuned and go through the lectures and make sure you practice on it and make sure you mark out the points of interest leading to the idea that I just explained in this lecture. So go through your own personal charts, try to anticipate the bias. What I mostly pay attention to when anticipating my bias is what is the recent swing high and swing low? What is price currently doing, retracing to a point of interest or price supporting from a point of interest? Which in the dollar index, price traded through a point of interest, taking out a sell side liquidity. And on the weekly time frame, there's a retracement to a point of interest. Not supporting from a point of interest is a retracement to a point of interest. The same thing to the daily time frame. Price is retracing to a point of interest. If you were to decide a bias from a 4 hour perspective from the swing high, swing low, an inter-day setup in this price action is to see a retracement to a point of interest. So when you're looking for intraday setup, like an easy scalping setup, is to anticipate lower prices to a 4 hour point of interest. And the 4 hour point of interest you can see is the order block. We have a 4 hour order block. Now, there's a 4 hour fair value gap. Let's zoom a little bit closer. After price took out the swing low, there's a 4 hour fair value gap, which price might use as a support area to trade higher. Anticipating and anticipating lower prices to retrace to the 4 hour fair value gap would be your intraday bias. Going in, I can say today's price action. So let's look at the 1 hour time frame to see how price is trading to the idea of retracing to the 4 hour fair value gap. On the 4 hour time frame, price traded through the swing low, traded through the fair value gap. What the price did, retracement to a breakers block. You can see the retracement to a breakers block. You can just call it a normal order block. A retracement to the breakers block. Use the breakers block as a resistance area to trade lower. This is how to anticipate intraday setup to look for those easy scalping trade. On 5 minutes, you can see how price respected the other block. After respecting the other block, trading lower. Now, because it's a scalping setup, this is how to use the 4 hour, the 5 minutes, the 4 hour, the 1 hour, the 5 minutes, and 1 minute for entry. I will talk about this trade setup later on, but I'm just showing you what I will be going through on lecture 3 on how to use it to determine your bias, and we will see how price played out. Retracement to the other block, you can see a lot of areas for you to take advantage of. Retracement, fair value gap, used it as a resistance to trade lower. Your drawn liquidity, your first drawn liquidity is to see price run the swing low before the overall target, which is the 4 hour fair value gap. The bias I'm talking about on a weekly perspective, I'm talking about the weekly perspective. Now, most of those bias will take time to play out. It might take weeks to play out, but I'm giving you bias, an overall bias on what you will be anticipating on a long-term basis on those currency I just talked about. But on intraday setup, there might be some days where you will be buying and some days where you will be selling on those intraday setup. It's depending on what the 4 hour and the one, sorry, the 4 hour and the daily time frame is ready to do at the immediate moment. So tomorrow, top-down analysis, it wouldn't be a live top-down analysis, it will be a pre-recorded video. I will be talking about bias. But in that video, I will be stating out what are the key features for you to pay attention to decide your bias. Now, I'm gonna try to do it before the London section so that you guys can use it to know what you will be anticipating on the London section. It's depending on the time when I have a free time to actually do the video, but I will try to do it before the London section so that you guys will have a perspective on what I will be looking at on Euro USD. But you can see how price respected it created lower smoothly. Make sure you do a little review on this price data that I just explained with the 4 hour, 1 hour, and the 5 minutes while using the 1 minute as an entry level. You have to go through the steps. You have to do your own personal practice to understand price action more better. So the 2026 mentorship program, I'm mostly going to be talking about you doing the work, you personally doing the work, going into the chart, doing in the top-down analysis on your own. Whenever I do a top-down analysis, make sure you do a follow-up to that top-down analysis. Make sure you write down the steps. Make sure you write down the bias I'm currently anticipating. You can go through the video multiple times just to understand what is my perspective in price going in the week. Then you look at how price delivers. If it's going to deliver the way I talked about or trading against my bias, look at why did price trade against my bias, what are the support area that price used to trade against my bias, and what are the support area price used to trade to withdraw on liquidity I pointed out. Now I wouldn't be right all the week, which I've done this before. You see that you can be right 100% of the time, but in most cases, I will be right about where price will be trading to for an individual week. Which in this week, I'm currently looking at higher prices on the dollar index. So that is it for this lecture. See you guys in the next lecture.